Your 30s are the most expensive decade of your life. Between buying a home, raising kids, taking care of aging parents, and trying to climb the career ladder, money never seems to stretch far enough. And if you're not careful, this is the decade where you either set yourself up for financial freedom or lock yourself into decades of stress. Now, most people only realize this at 40, when it's too late to undo the mistakes they made in their 30s. And that tells me one thing: you're not like most people. You want clarity, you want a plan, and you want to know exactly what financial milestones you should be hitting in your 30s to make sure your 40s and 50s are secure, comfortable, and free. Hi, my name is David, and in this video, we're breaking down the 5 key financial milestones you absolutely must hit before you turn 40. These are the steps that separate people who retire early with options and freedom from people who work until 70, still wondering why they never got ahead. And listen, even if you're in your 20s, this video is your roadmap, so you don't waste time or fall behind. If you're in your 30s like me, this is your checklist to get on track right now. And if you're already in your 40s, this is how you'll know whether you're ahead, behind, or right where you should be. But here's the catch. The last milestone we'll talk about is the most overlooked one, yet it's also the one that creates a permanent gap between people who build wealth effortlessly and people who struggle financially their entire lives. So I'm asking you to stick with me until the very end, because that final milestone could literally save you years of hard work. And hey, while you're here, drop a quick comment. What's your single biggest money goal before you turn 40? More savings, debt-free, buying a house? Let's see how many of us are on the same page. All right. With that said, let's dive straight into the first milestone. And this one is the foundation for everything else. Milestone number 1, wipe out consumer debt completely. Credit cards, car loans, personal loans, all of it. Now, I'm not saying debt is always evil. A mortgage on a home you live in, that's different. But credit card debt, car payments, and high interest loans, those are silent killers. Think about it. The average car payment in America right now is over $700 a month. That's $8,400 a year gone. And when you spread that out over a decade, that's nearly $85,000, like the equivalent of a down payment on a home, or years of investment growth that could have doubled or tripled by your 40s. But here's the tricky part about your 30s. This is when life pressures you into taking on even more debt. Your friends start buying bigger homes, driving nicer cars, or paying for lavish weddings, and if you're not careful, you'll chase that lifestyle too, convincing yourself you deserve it because you're finally earning more. The truth? Your 30s should be about building wealth, not renting it. Every dollar that goes to a car loan or lingering student debt is a dollar you're not investing. And worse, debt adds stress. Imagine trying to cover childcare, unexpected medical bills, and still helping your parents. All while $700 vanishes from your paycheck every month just to cover a car. That's why eliminating consumer debt is the first milestone. It's not about punishment, it's about buying yourself flexibility. And that brings us to milestone number 2. Build an excellent credit score, ideally above 800. Why? Because this is the decade where you're likely to buy your first home, refinance, or even explore real estate investments. And your credit score quietly determines whether you'll keep tens of thousands of dollars in your pocket or hand it over to the bank. Let me give you an example. On a $400,000 mortgage, the difference between a 6.5% interest rate and a 7% rate, which could simply come down to your credit score being a little lower, adds up to more than $40,000 in extra interest over the life of the loan. That's the price of a brand new car gone just because your credit wasn't where it should be. And here's what most people don't realize. Building an excellent credit score doesn't require anything extraordinary. It's about consistency. Pay every bill on time. Keep your utilization low. Avoid missing even one payment because a single 30-day late mark can drop your score by over 100 points. and that scar stays on your report for years. The good news? Your 30s are the perfect time to lock this in. By now, you've probably had years of credit history, maybe a few mistakes in your 20s, but with steady payments, responsible use, and time on your side, you can repair almost anything. So here's the picture. No consumer debt draining you and an elite level credit score working for you. That combination is like clearing the road and hitting the gas. Suddenly, more of your money is compounding instead of being drained, and lenders start treating you like you're in control, not desperate. And once you've cleared the financial clutter, you're ready for the next milestone, the one that forces you to stop winging it and start thinking decades ahead. Once your debt is gone and your credit is solid, the next milestone is to create a real financial plan. And yes, that includes building an emergency fund. Here's the reality. Most people drift through their 30s with money. They save a little here, invest a little there, maybe contribute to a 401k because HR told them to, but drifting with money is dangerous. Why? Because life in your 30s is unpredictable. This is the decade where everything hits at once. One year, you're celebrating a new baby. The next year, you're helping your parents with medical bills. And somewhere in between, you might lose a job or even face a divorce. And without a plan, those curveballs don't just derail your finances. They wipe out years of progress. That's why milestone number 3 is all about clarity. Your plan doesn't have to be complicated, but it does need to answer a few big questions. What's your income target for this decade? Are you coasting in a job, or are you actively pushing for promotions, side hustles, or new opportunities? How much are you investing every single month? Not when you feel like it, not when there's leftover cash, but consistently, like a bill you can't skip. What are the big goals you're aiming for? A house, early retirement, starting a business? Because without a target, money tends to disappear into lifestyle creep. Now, let's talk about the safety net, your emergency fund. If you've ever had your car break down, lost your job unexpectedly, or had to cover a sudden medical expense, you already know why this matters. Studies show that nearly 60% of Americans can't cover a $1,000 emergency without borrowing money. That means one broken water heater or one ER visit can shove people right back into debt, undoing all the progress they made. The rule of thumb is to aim for 3 to 6 months of living expenses, but here's the mindset shift. Your emergency fund isn't just money in the bank, it's peace of mind. It's knowing you can take risks at work, start a side business, or even walk away from a toxic job because you're not living paycheck to paycheck. Think about how much more confident you'd feel knowing you could survive for half a year without a single paycheck. That's not just financial security, that's psychological freedom. And here's the beautiful part. Once your debt is gone, building this fund becomes way easier. Remember that $700 car payment example? Imagine redirecting that straight into savings for 12 months. That's an $8,400 safety net in a single year without changing anything else about your lifestyle. So by the end of this milestone, you're not just debt-free, you're not just disciplined, you've got a plan and you've got a cushion. And that combination is what allows you to move from defense to offense with money. Because once you're protected from emergencies, the real question becomes, how do you start building wealth aggressively? That's where the next milestone comes in. It's time for the milestone that separates people who struggle forever from people who quietly become wealthy. Consistent investing for retirement and beyond. Here's the harsh truth. Most people don't realize until it's too late. If you're in your 30s and you're not investing yet, you are already behind. Time is the single most powerful force in wealth building, and every year you wait costs you hundreds of thousands of dollars down the road. Let me show you something simple. If you invest just $500 a month starting at age 30 and you earn a 10% average return in the stock market, by 60, you'll have around $1.1 million. But if you wait until age 40 to start, that same $500 a month only grows to about $340,000. That's a $760,000 gap. Just because you delayed by 10 years, that's why this milestone isn't optional. It's urgent. Now, how do you actually do it? It's for most people in their 30s, the easiest way is through retirement accounts like a 401k or IRA. Why? Because these accounts give you tax advantages, which means your money grows faster than it would in a regular brokerage account. If your employer offers a 401k match, that's free money. You contribute, they contribute. It's literally doubling part of your investment instantly. Ignoring that is like saying no to a guaranteed raise. Next, open a Roth IRA if you qualify. With a Roth, you put in after-tax money now, but all the growth is tax-free forever. Let's say, imagine investing in your 30s and watching it compound for 30 years and then being able to withdraw it all in retirement without paying a single dollar in taxes. That's how people retire with far more than they ever expected. And here's something most people overlook. Investing isn't just about retirement. In your 30s, you can also start building what I call a freedom fund. This is money you invest in a taxable brokerage account that's not locked away until you're 59 and a half. This fund can be used for early retirement, launching a business, or even taking a sabbatical in your 40s or 50s. It's about creating options, not restrictions. But let's be real. Investing also comes with fear. Maybe you're thinking, what if the market crashes? What if I lose money? The truth is, the market does crash. It always has, and it always will. But here's the kicker. The market has also always recovered. And the people who stayed invested came out far ahead of those who tried to time it. So the mindset in your 30s isn't about predicting the market. It's about consistency. Month after month, year after year, automatic contributions that happen whether you feel like it or not. That's how wealth is quietly built. By the end of this milestone, your money isn't just sitting idle in a savings account. It's working for you, multiplying in the background while you focus on your career and your life. And that's when everything shifts, because suddenly you're not trading all your time for money anymore. But here's the twist. Even if you do everything right, pay off debt, build credit, save an emergency fund, and invest like clockwork, there's one more milestone that makes or breaks your financial future. It's the one most people ignore, and it's the reason why some people with high incomes still end up broke. You've made it this far. You've cleared debt, built credit, created a plan, saved for emergencies, and started investing. That alone puts you ahead of most people in their 30s, but here's the thing almost nobody talks about. Building wealth is only half the battle. Protecting it and controlling your lifestyle is the real game changer. Here's what I mean. How many stories have you heard about high earners, doctors, lawyers, entrepreneurs who make 6 or 7 figures but somehow end up broke? It's not because they didn't make enough money, it's because they didn't protect it. The overlooked milestone in your 30s is to master protection and discipline. That means 3 things. 1, lifestyle control. This is the silent wealth killer. As your income grows, it's tempting to match it with a bigger house, nicer cars, luxury vacations, and endless upgrades. But here's the truth. If you let lifestyle creep consume every raise, you'll always feel like you're running in place no matter how much you earn. The wealthy don't just make more, they keep more. If you can lock in the discipline now to live below your means even when you're making more, your future self will thank you 1,000 times over. 2, insurance and protection. It's not sexy, but it's necessary. In your 30s, you're not just responsible for yourself anymore. Maybe you've got kids, a spouse, or even parents who rely on you. That's why life insurance, health insurance, and disability coverage matter. One accident, one illness, one unexpected event can wipe out everything you've built. Protection is what ensures that one bad day doesn't undo decades of good work. 3, estate and long-term planning. This sounds like something only rich people need, but it's not. Having a will, naming beneficiaries on your accounts, and making sure your finances are organized is one of the most loving things you can do for your family. Because the truth is, money isn't just about you, It's about the people who depend on you. Now, why is this milestone the most overlooked? Because it doesn't feel urgent. Debt screams at you with bills, emergencies pop up and force you to react. Investing feels exciting because the numbers grow. But protection, lifestyle control, it's quiet. Nobody brags about having the right insurance or keeping their expenses low. Yet those are the exact habits that ensure all your hard work actually lasts. So let me leave you with this thought. By the time you hit 40, you don't just want money, you want freedom. You want peace. You want to know that no matter what happens, your family is safe, your wealth is growing, and your future is secure. And that doesn't come from luck. It comes from hitting these milestones one by one while you're in your 30s. The people who do, they reach their 40s and 50s with options. They can retire early, they can take risks, they can say no to things they don't want to do. The people who don't, they stay stuck, no matter how much they earn. So the choice is yours. Your 30s are either the decade you set yourself free down or the decade you chain yourself down. And now you know exactly what to do. If you like this video, make sure to hit that like button. It really helps the channel grow and reach more people who need this. And of course, subscribe so you don't miss the next one.